What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol MMAT for Metamaterials Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. Clearly, there have been some developments here. We've covered this one in recent history, as noted by the drawing here. And what we're seeing is, of course, a large gap up. It made a pop higher and, of course, filled the gap closing week to the downside here. So how do we know that? Well, first, if we just look on over at the 30-minute intraday time frame chart, you can clearly see that we had a morning pop and then a drop into the afternoon to certainly fill the gap and some. Now, this is where it gets a little bit interesting because if we do something like this and just map out the actual gap fill area slightly below a prior area of resistance that we had, so what we're going to do is just remove that because the more relevant structure is, of course, in recent history. You can start to see that into the end of the day on this small little bounce in the last 2 or so hours of the day, we never actually made it back up and out of the prior day's range. So I do think that that's noteworthy. To me, the first level that we really need to clear if there's going to be any more upside continuation has to be this 455. The next thing that we like doing is taking out the Fibonacci's and going from the high of the move to the low of the move just to judge, how was the price action? Was it strong? Was it weak? And as we alluded to, it was certainly weak, never getting even close to that 38.2 on the bounce. So that would be the next level that I would argue we should watch for. I would also kind of just say that it's more structurally important to go slightly higher than this 485 and just call it where these candle lows and highs are. So we'll map that out here, then get rid of our blue lines to clean this chart up a bit. And again, that's going to be very close to the 38.2, but 490 is the next major area to watch to the upside if there's a breakout up and over 455. So the signpost to the upside would be consolidation here would be okay. A break up and over 455 puts 490 into play. And if we get some sort of consolidation, maybe a bullish pattern just underneath and we get the break, then you're looking left. It's probably likely we come back up and revisit. I would argue 560, basically towards today's highs. There's no real structure to the left, as we've mentioned, until we really get into that 670 mark to the upside. Do also note that we rejected the daily 50 SMA, right? So that's also a little data point that you can carry forward here. I wouldn't be overly bullish on this going forward unless we see a couple of days, maybe something like this, a hammer candle that prints an indecision doji, basically something that would tell you that this pullback is coming to an end. We can flip long over the highs and then start to target some of these areas which we've just mapped out from today's session. If we start trading underneath, I would say the critical area here is 413, which as we know is the prior pullback low right around here. If that gives up, then I would say we're back down to the top of the range at 374 as discussed in the last video. We did hear the range being defined by that white box here on the daily perspective. So those are my thoughts here. Probably let the dust settle, see what happens, see what structure builds out, and then reevaluate some of those levels which we've talked about in today's session. So if you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.